What's cracking, investors? I'm back in the game with JD.com. Now, not too long ago, I made a video about how I approach this trade and how to de-risk it by going into the options market and selling puts instead of just buying the equity outright. Now, this gives me the ability to wait out volatile moments and also the ability to collect some profit along the way if things go my way early. And it's good because I can do it in size, right? Because I'm de-risking the trade a little bit, I can actually put more on the table and I can leverage, I can use margin in order to try to collect some of that premium income from the theta decay. So here's JD.com. Now the overnight market is looking good. I actually entered this trade about 2 days ago, somewhere around here. Previously, I had sold puts with the strike price of 32.5, but now I'm using the 35 strike price. You can see it. There's 30 contracts sold. I made a brief post on YouTube community tab with the picture of it. So far, I'm about like $900 in the positive. It says 810 because I also bought a call for JD at the $40 strike price, which probably will not happen. But if it happened by the 28th, I'm happy. It's a week away. We'll see if it happens. The collateral used is $105,000. That's what I mean by going in size. So if it wasn't so de-risked, I would not be putting $105,000 right to play. But this way, in 6 months or 7 months, if JD drops, yes, I'll be forced to buy it at the $35 strike price. But actually, because of the premium I've collected, it's going to be more like 31, and I'm willing to take that risk. I'm fine owning JD at $31 per share, and I've just lost 6 months of potential gains in opportunity costs, but I'll have to deal with that. So, how has JD been performing? Well, fairly well, actually. If you look at the 1-year chart, this is kind of like a really big basing period. If you know me, you know that I'm not a technician. Okay, I know a thing or two about technical analysis, but I'm just basically, watching how the price goes. I don't even like to use the bar charts. The line chart is just fine for me. Robinhood, added the ability to use bar charts, but they give quite a bit more information, like the open, the close, the high of the day, the low of the day in a single bar in the time period of your choosing, but it's a bit hard to read, and this is more simpler in my opinion. So what you can see here is a series of 2 higher lows, and haven't quite formed the higher high yet, but I think we're on the way of doing that. So we'll see if this channel kind of persists. Now again, I'm talking technical analysis, but take that as a huge grain of salt. Like, I'm just basically looking at levels. Is JD low or high? If we look at the 5-year period, you'll see that relatively to other periods in time, JD is pretty low. It had a high of 100 and something back in February 2021, and as we all know, it's had experienced a brutal bear market ever since. But things do look to be stabilizing. I would say the current basing pattern is better than this one here in May 2021, where we experienced a similar kind of like higher high, lower low. I mean higher high, higher lows, and then eventually, of course, it resumed the bear. I think this looks like a little bit better because it's spent more time grinding around this price, plus the margin of safety, right? It's a lot easier to look at this level where the stock's been, quite a bit higher than that many years ago, when the revenue was like 1/5 of the size of the company, right? And now it's arguably a much better bargain, even if their environment has changed a little bit. Like, the company is much bigger, more developed. It's grown and developed faster than many people anticipated. The company is still growing, and quite frankly, I prefer to play JD. I think there's more margin of safety there than Alibaba. Not that I dislike either of the companies. By the way, Chinese red today. I'm not pro China or anti China. Anyway, my humor has been like slipping quite a bit. So, not that I'm anti Alibaba or anything like that. I just think that Alibaba has, I get that the profit margin's a lot higher on Alibaba and the products that they have, but just looking at the top line, JD.com has higher revenue than Alibaba. In fact, JD.com I think is probably the highest, if not one of the highest, the highest revenue company in the entire world. And even though the margins are slimmer, the valuation is 1/4 or even 1/5. I think 1/4 ish the price of Alibaba. So I can buy 4 JDs for the price of one Alibaba. Like, which one would you rather own? Would you rather own 4 JD.coms? Like literally 4 of them. Or one Alibaba? So I want to know the answer to that question. I'm actually curious. Like, which one would you rather own? Because that's kind of the deal on the table there out there right now. So anyways, that's why I'm playing JD.com. Let me know what you're doing, whether you like any of these ADRs or you prefer a different Cayman Islands pseudo, contract profit sharing holding built for investors around the back, kind of piece of paper, not even digital promise. Yeah. Which one's your favorite? Let me know. Peace out.